Well, friends, today we are talking geopolitics and we have an expert joining us from BCA Research. Mr. Matt is here with us. He was one of the speakers at the CFA 9th CFA conference in Mumbai. Matt, thank you very much for your time.
Thank you. It's my pleasure to be
Among
here.
the fund managers we speak to in a daily course at ET now, be domestic or globally, one big factor which they are following very closely these days is the way geopolitics actually progressing, and it's a geopolitics of issue of a different kind. It's not a war which is happening, but a simmering kind of a cold war which is erupted between US and China on the trade front, and probably positioning of themselves in front of each other as a global power. How are you fielding queries or analyzing this issue? Because the market has started to factoring in some resolution or reconciliation going forward.
Yeah. Well, generally, we look at it from a long-term perspective. From 1972 to 2008, the US and China had a wonderful relationship. That was the Goldilocks period. It won't ever get better than that. Now we're experiencing competition between the two that is a form of great power competition, and that will persist throughout the 21st century. So trade tariffs or sanctions or secondary sanctions or other tensions will continue throughout the coming years, and that will wax and wane according to the political moment and political constraints of the leaders. Right now, Trump is constrained, and so we're seeing a move toward a little bit more negotiation, and Xi Jinping has also had some negative economic events constraining him, but that ultimately won't prevent a resumption of conflict in the coming years.
So from the capital market point of view, how big an issue should it be? How should global asset managers factor in risk on this front as we move forward?
The driving factor is the fact that China is not stimulating its economy as much, and that the US is actually outperforming because the US has been stimulating its economy. So beyond the trade war, what we're really witnessing is a global divergence, because Xi Jinping is a leader who wants to constrain leverage and excess capacity and pollution and the excesses of rapid growth in China. And as long as he does that, Chinese growth rates are kind of capped. And the US, meanwhile, doing quite well, forcing inflation up, forcing the Fed to hike. That's creating a global divergence.
Mm-hmm. The other geopolitical issue, which also not exactly asset managers, but strategists in general are watching, is what's happening in the Middle East. On the one hand, Saudi is turning out to be a key player on determining how the crude oil prices would actually head from here on. But on the other side, there is a lot of family issues which are panning out in Middle East of their own, which people say could also have impact on how that region, the stability could actually pan out from here on. What are your observations?
Saudi Arabia is in a very difficult position. The United States is gradually withdrawing from the region. The U.S. is becoming a net oil exporter soon. It's a major oil producer now. Does not have as overwhelming of an interest in the Middle East, and in fact is pivoting to China. Regardless of which administration, which political party, U.S. is becoming more of an Asia-Pacific power, and that is leaving the Saudis with a dilemma as to how to go forward, how to manage their regional issues, and also they're simultaneously struggling with the need to reform their economy and diversify and cope with a large youth population and demands for change. So that makes it difficult for them, and I think that will continue, as well as the fact that cutting oil production right now to get the oil price up is not something that President Trump wants.
Talk to us about, you give talks in various forums across the world, such as the CFA conference here today. What kind of queries are you getting from asset managers? What are they probing you most about? What are they worried most about when it comes to political tension, the geopolitical tensions in the world?
Yeah. I think asset managers, asset allocators are very concerned about the Fed's behavior. US fiscal policy is kind of priced in. For the most part, it's known what has happened with the tax cuts, et cetera, whereas the Fed's reaction function is questionable now. There's a concern in a huge debate about where inflation will go. So that's a question we receive a lot. Oil prices too, of course, because we've had a big drawdown. Not everyone is as convinced as we are that it was the US waivers on the Iranian sanctions that caused the big oil price drop and the volatility. There are, of course, there's a decelerating global economy, and there are fears that it's really weak global growth that markets are sniffing out there. So those are two major questions. And then, of course, everywhere I've gone over the past 2 years, investors are very curious about US-China relations, because I think there's an awareness of what I said, that we are entering a new paradigm, and therefore US-China attempts to negotiate and manage their tensions are failing.
Mm-hmm. Well, India too is now breaking into the top economy slots globally, and the per capita is just about to cross the $2,000 mark. And our own Prime Minister in the last 4.5 years have been traveling across the world, meeting with premiers and striking their own chord. How are you analyzing the emergence of India and our political leaders' relations with our top trading partners globally?
Emergence of India is hugely significant. Essentially, the US and China, even though they are the two big players, they're also working in a world in which Russia still has an enormous amount of military power and strategic capability, where Europe is a unified large market comparable to the US that continues to integrate and is actually has visions of expanding its global role, and India as well, a major emerging economy that it can counter China, that can form closer relations with the US after many decades of kind of waxing and waning ability of those two countries to really form a closer relationship. India also working more closely with Japan and Australia. Broadly speaking, the rise of China is mobilizing Asia to look to ways to hedge and counter China, and that is a driving geostrategic factor in the world.
My last question to you, do you see Mr. Trump coming back in his second term as the premier of US president? And also, do you see Mr. Modi coming back in India for his second term?
Recession will determine Trump's re-election. Presidents do not in the United States win re-election if there's a recession taking place. And because we're so late in the economic cycle, in fact by July of this year we'll surpass the historic record of US expansions, that will put Trump into a very tough spot. And that's why he issued those waivers. He wants the oil price down to extend the cycle. That's why it's fortunate for him that the equity market did sell off and force the Fed to pause, in a sense, because of Fed pausing could actually prolong the cycle as long as that doesn't result in further equity sell-offs in a bear market. And that's why he's pivoting on China a little bit to try to pacify some of those issues to get to 2020, because the recession ultimately is the determiner. If there's no recession, Trump is favored. Incumbent presidents generally do win re-election. As for Modi, I think the issue with Modi is that he will remain in control. That's our base case. Clearly the polling is working against him right now and against his party. And clearly we've seen the high tide of the BJP, both in terms of its seats in the lower house, but also in control of states out of the total states in India. So there's a downshift in terms of his overall political sway. But broadly speaking, yes, we would expect him to still squeak by and remain in power. And then it's an issue of the world recognizing that India has a lot of underlying strengths, so that structurally you can be overweight India, even if in the short term we've got some election cycle issues.
All right, Matt, wonderful chatting with you. Thank you so much for your time.
Thank you. Thank you.